Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Today we have decided to take a look at the Great British Pound. That was not really a simple choice because currently we see very interesting price behavior on the Great British Pound and the New Zealand dollar. But on the Great British Pound it's a bit more details that demand some explanation and details that needs to be so your attention should be attracted to these details. Also, it is very important to take a look at the weekly and monthly chart because the major foundation, the background of the situation that we will discuss on the daily time frame chart in reality stands on the higher time frame chart in the weekly. Also because it has the relation to our former analysis on the Great British Pound, because if you remember, approximately a month ago we have discussed actively the bullish grabbers that have appeared on the weekly chart, and we have expected where finally market will trigger the upward action. But once these grabbers have failed, we have abandoned the discussion of the Great British Pound for some time because nothing interesting has happened there. But right now, the new action that market is showing here again is rebounding the idea of the possible upward retracement. And currently we have the really very nice patterns and the price action that mostly could be described as the bullish. And if you all read our analysis, especially on the weekly analysis of the weekly chart, you will see what we are talking about. On the daily, all this mess could really lead to some big and small action and big and small patterns. Particularly speaking, in the beginning of this video, I would like to return back to the discussion of this long-ranged candle. Once we have said that even the theory of the technical analysis, the long-ranged candle should be treated as the pattern or as the range that in the most cases will hold the following price action for the considerable period of time. And that's what we particularly see on the daily Great British Pound chart. In fact, this range holds action within the 3 weeks when investors think and decide what the direction to choose. Finally, we have some really bullish action that points on the possible upward continuation. The first one, take a look, that is the failure breakout of this range. The theory of trading of such candles tells that as soon as market will show the breakout out of this range, the long-ranged candle, the market should pass the distance equals to the length of this bar in the direction of the breakout. But as soon as the failure has happened, the failure breakout has happened, the following action usually shows the moving right back up to the opposite extreme point of this range, and in the most cases market shows the breakout in the opposite direction and shows the action in the same distance in opposite side. So it means that as soon as the failure breakout has happened, market usually should pass the twice distance in opposite direction. That is the behavior that happens very often when the market deals with this long-range candle. That's almost the same as in the case of failure breakout of the flag. Recall what we have traded on the gold market. The failure breakout has happened and market has shown the opposite action significantly greater than the range of the flag. So this is approximately the same. Not in terms of the pattern, but in terms of the distance ratios. So other words, in the two words speaking, the market should reach an area somewhere around 5650 area based on this pattern. The second moment that we have here, guys, is the failure of the butterfly. As soon as market was forming the butterfly, it should reach the 127 extension before reversal. But take a look, that hasn't happened. Market has shown the barely moved below these lows and turned up and shows the upward direction. In fact, we could say that that was the wash and rinse of these lows and first return back. That also looks bullish. And it seems that the one barrier that really prevents market from the further upward direction is the daily overbought. So you can see that market right now stands significantly above the overbought area that hasn't happened since long period. So you can see on the daily charts almost never has happened in the recent time, within the year or even more. So everywhere the market just stops right at the border of the overbought. But here, guys, take a look. We have significant breakout and close above the overbought. It tells about the strength of this upward action. And the final moment on the daily chart is that this consolidation stands precisely at the 1618 extension of this retracement. And that ratio is very typical for the hand shoulders pattern. If you will read the analysis on the weekly chart, you will see that in general this big pattern stands in agreement that corresponds with the analysis that we have on the weekly, because on the weekly chart market hints on the possible deeper retracement to the upside. And as you can see, market has formed left shoulder. This head keeps the harmony almost pips to pips, 1618. As you can see, and turns to the upside, and this turning was really fast. Now, based on this pattern, the nearest target stands approximately in the neckline, so maybe it's somewhere around 154 area, 54, 54.20. Okay. But the problem here is with this overbought condition. So if you take a look at the 4-hour time frame chart and the next chart, here we see also some kind of guys that know maybe this is the double bottom or something of that sort. Anyway, this consolidation market moved above the weekly monthly pivot point. This also will be the weekly pivot point slightly lower. Market has formed here with a bullish grabber, small grabber that suggests the taking out of this top. And if we wouldn't get the overbought, I would tell that probably market should reach first this area. It's 151.70 approximately. This is weekly pivot resistance one, and guys, this is also the weekly confidence resistance. You do not see it on this chart, but on the weekly analysis you will get it. And I would suggest, if we wouldn't get the overbought, I would suggest that market first should reach this area, and after that we could get some retracement down. Also, guys, take a look. That's also the top of this range. But since market right now stands at overbought, hardly market will show this upward action immediately. Probably we will get some sort of the consolidation, maybe some even retracement right back down to the weekly pivot point before upward action will happen, or something of that sort. But I suspect that the major retracement we should get when the market will reach this area. Maybe market by this action retest with some sort of the neckline or something of that sort. So you can see monthly pivot point stands in this area. And that probably will be our chance for taking the long position. So currently, guys, based on the situation that we see on the weekly chart, on the daily, it seems that we could think about taking the long position because retracement to the upside could be real significant. And the recent action really confirms this. So right now we just have to get, we need to get the right moment where we could take the long position. So let's monitor the price progression, price behavior on the coming week. And I hope that we will get this chance.